Tesla and drama, Elon Musk and drama, probably a better love story than Twilight. Now, 2 days from now, on Tuesday, we're going to get the next earnings report and the earnings call, which I truly hope we're going to get most of our questions answered. Because right now it is true, even if you are a long-term Tesla shareholder, me personally, I've been a shareholder since 2019, so I've seen the highs and I'm seeing the lows right now as well. Now, currently, let's not lie to ourselves, the situation is not great, right? The situation is not great with regards to EVs worldwide. Situation is not great macroeconomically, geopolitically, and specifically with regards to Tesla as well. The situation is not great. So I'll discuss the good and the bad. Most of the things are bad right now, but let's try and balance it out. I will not hide stuff from you whatsoever. I'll first start with the biggest hit, which is, of course, Tesla stock is down 40% year to date. This means that currently it is cheaper than the 5-year mean when you look at forward PE, EV to EBITDA, price to sales, and even price to free cash flow. That's a metric in the last 12 months. But just because right now you can see that Tesla is cheaper on those metrics, if you look at price earnings to growth, that's actually more expensive right now than when Tesla was around $110, $120 or so. Why is that? Well, because the business itself was in a much better place back then. The stock just became extremely cheap, but the growth projections were much higher than those that are today. And so today, maybe you're getting stock at 140, 150, maybe it can go even lower. But the business definitely does not have the same momentum it had previously. Of course, that can change. Now, like I said, right now, we have a lot of headwinds with regards to Tesla, specifically when it comes to the profitability side of things. Margins have come down. Why is that? Well, one, in my opinion, there is a lack of demand for EVs, not just for Tesla, but worldwide. More on that in just a second. Secondly, price cuts. Yes, it's true that the cost to make Tesla cars have come down, but price cuts have been so heavy that, well, it weighs on margins, and so it will weigh on EPS projections for Wall Street. Like I said in the previous videos, Wall Street doesn't care about robotaxi networks that might or might not happen years out from today. They want to know what happens in the next 6 to 12 months. That's all. Now, more specifically, look at these headlines right here. We'll start with Mercedes. EV sales declined at the start of the year by about, I think, 8% or so. Then we've got sales of Volkswagen electric cars have plunged by almost a quarter in Europe as demand for battery-powered vehicles stalls and buyers return to petrol. EV sales fell by 24% for the first 3 months of the year as high inflation and rising energy prices dampened demand. But at the same time, you've got this headline right here. New vehicle sales in the United States rose nearly 5% in 2024 as buyers defied high interest rates, but EV sales growth slowed. So, yes, it's true. High interest rates, high inflation, big ticket items like cars, for example, are not your number one priority. But the numbers don't lie. People go out and buy cars. They just don't go out and buy EVs. Why is that? Is it a lack of education? Lack of advertising, for example, across the board? Do people not know that EVs are better than ICE vehicles or even plug-in hybrids? Because plug-in hybrids, to be honest, it's neither this, it's neither that. So what's the point? But yeah, you have to ask yourself those questions. I've been talking with friends, family, people I used to work with, etc. We have conversation about EVs. Should I buy an EV? Should I not buy an EV? And they're all coming with the same arguments if they're not going to buy an EV, right? It's all about the battery. Oh, safety. I've seen the headlines. They caught fire, etc., etc. It's too expensive. It's not better. How much more does it cost? EVs compared to gas, etc., etc. So there is a lack of education. There is that part for sure. Now again, Tesla is not the only. Yes, Tesla has started advertising on a small scale, right? Digital advertising, stuff like that. Not really the big thing. We've talked about that, I think, a couple of weeks ago. Compared to other automakers, they're spending peanuts on advertising. But the others are spending money, and yet people are not convinced that EVs are better. So you spend money, but the results aren't what you hoped for. So you understand the issue here. The messaging needs to be better. There needs to be way more education with regards to EV, because otherwise, why would people switch from something that they knew from so long ago to something extremely new where all the headlines are mostly negative? You have to sometimes think from a customer's perspective and not from an engineering's perspective, for example. In my previous video, I've also asked you how come that the refresh Model 3 is not in such high demand in China. Well, some of you have answered, and I agree. The changes are very drastic when it comes to Tesla cars, right? You have to shift gears on the touch screen. You have to indicate where you're going. It's all on the wheel. There's no stalks anymore. For some people, yeah, that's a no. Even though it's a small but big change, it's enough to push a customer away to another car because they are familiar with those objects, those buttons inside the car. Yet, even if it is, let's say, easier in the long run to use it all on the wheel or on the touch screen, or it's more efficient, you name it, from a consumer's perspective, it's already a huge surprise. I'm going to spend so much money on something that now I have to retrain my brain. No, thank you. I'll go with the other one, even though the price may be a bit higher or not, but at least I know what I'm getting myself into. Understandable. Now, going back to more bad things, which is obviously the price cuts leading to less earnings, less profits for Tesla. We've got lots of price cuts more recently. First one here, full self-driving now, $8,000. Some people are still saying it's too high. And to be honest, yeah, if you look at the $99 per month right now, it is too high. But in my opinion, you're paying a premium right now for the $8,000 because it puts you in the safety box, let's say, that those that pay a subscription are not in. Because you can pay right now $99 a month, but let's say a year, 2 years from now, it can suddenly jump again to $199. Here, with the 8,000, you know you bought it and it's yours. The only issue I have with that is that Tesla should make it that new buyers of a new Tesla, upgraded, or maybe you have two, you should be able to transfer your FSD from one vehicle to another for free. It's just being fair and be nice to your customers. More price cuts in China, so the locally produced Model 3 and Model Ys were cut by around 4 to 6%, while the imported Model S and Model X were reduced by as much as 22%. Moreover, on China, FSD China. So someone on X here asked Elon Musk, which by the way, this account has around 3-5 followers when he asked that question. I'm a Tesla owner in China. I look forward to FSD entering China as soon as possible. When will that be realized? When can the Hardware 3 system use 3D modeling images? When will the new reversing assistance be pushed to Tesla Hardware 3 owners in China? To which Elon Musk responds, it may be possible very soon. Of course, we know very soon for Elon can be quite a while. Now, if you remember a couple of weeks back, I did some calculation here with regards to the subscription for FSD. These are napkin math calculations. So the Tesla fleet, 6 million cars, probably now a bit more. US FSD capable, 2 million cars. The subscription is $99 a month. I put a take rate of 20%, can be higher, can be lower. So revenue per quarter, $118.8 million. Revenue per year, close to $500 million. If you put here 80% margin, you're at $380 million each year. Now let's say in China, the same thing happens. FSD capable, 2 million cars. But here the take rate stays at 20, but the price per month is much cheaper. It's at $49 per month. And so revenue per quarter is close to $60 million. Revenue per year, $235.2 million. And so if you combine both of those, you're getting yearly revenue in recurring revenue, that is, $710.4 million with an 80% margin. That's close to $600 million in profits each and every year. Now, of course, for some, this looks like peanuts, right? We talk about this robotaxi thing as if it will print money in the billions and billions of dollars. But then again, if you look at this calculation, you're not even getting $1 billion in profits each year or even in revenue with these current numbers. That's the thing. These are just these current numbers. I'm not even adding more countries to this napkin math thing. I'm not even adding commercial licensing to other manufacturers, stuff like that. That, I think, will be much, much bigger. Up next, we have a quick update with regards to the India visit, which unfortunately is not going to happen anytime soon because Elon Musk said here, unfortunately, very heavy Tesla obligations require that the visit to India be delayed. But I do very much look forward to visiting later this year. I believe he might have forgotten that he has to be on an earnings call on Tuesday, or maybe he wanted to take that call in his private jet. Could very well be. At the end of the day, it is Elon Musk. Moving on to more price cuts, this time in the United States. Model Y cut by $2,000, Model X $2,000, Model S $2,000 as well. Now, some people were already complaining about this, and rightfully so, about the volatility in Tesla prices, to which Elon Musk here answered, other cars change prices constantly and often by wide margins via dealer markups and manufacturer dealer incentives. Only a fool thinks the MSRP is the real price. Tesla prices must change frequently in order to match production with demand. And to be honest, it makes sense. It's true that because of Tesla's model, right, direct to consumer, if a price changes, it goes into the headlines, right? But for other companies, you don't get the daily or even the weekly changes from the multiple dealerships out there in the United States that probably change the prices as frequently, if not more frequently, than Tesla. You just don't know it. But of course, from Tesla's standpoint, from a customer standpoint, it's definitely not nice to see those headlines that, oh, I just bought a Tesla, now it's $2,000 cheaper. But that's when you do direct to consumer, that's the thing you have to carry with you. Moving on to a 10x potential. This is something that Elon previously talked about in an earnings call, I believe, or maybe during an event, can't really remember, but you'll see and hear the clip right now.
I have very high confidence in the long-term value of Tesla. I see a really, see a path to a 10x. Well, maybe not these days, but they'll call it a 5x increase in the value of the company, maybe a 10x. But where things go along the way, the trials and tribulations and the mood of the markets, one cannot predict. And so
this is basically his response to a tweet asking if this is still the case. It says here, a lot of work to achieve that, but yes, of course, right now Tesla is worth less than before, so a 5-10x is definitely not the same. Then let's talk about the harsh reality right now. One of my favorite products from Tesla is the Tesla Semi. Has always been that. Why? I don't know. I just like the industry, like trucks. So Tesla Semi for me was a revolutionary, let's say, truck car semi that came out. Unfortunately, the expansion, there's still nothing to see. It's really sad. This is from Zangler, great channel to follow. He does some drone flyovers over these sites. I mean, the expansion is literally nowhere to be seen. And so, yeah, those are the things that I would like to hear more about during the earnings call. Progress on Tesla Semi, the expansion in Nevada, 4680 cells, the robotaxi, compact car, what's going on with all of that? I truly hope we're going to get some answers during the earnings call. Now, going back to the, let's say, drama disaster for Tesla right now, started, of course, with the delivery numbers. For the first time, Q1 is lower this year than it was last year. Of course, it's still higher than in 2022. But if you look at the performance back in 2023, I mean, it could be that 2024 is going to be a down year overall, unless we see a huge reacceleration, right, in the next coming quarters. But right now, doesn't really look that great. Then we had the announcement of layoffs, which also came in at a very, very strange time. Why come out first with $99 per month FSD, then with the 8.8 event, and then with the announcement of layoffs? Why not do the exact opposite, just from a sentiment perspective? I don't know, but okay. Layoffs. I tweeted this out when it happened. So Tesla in 2018, it had just under 50,000 full-time employees. In 2019, reduced that to close to 48,000 employees. In 2020, 70,757. 2021, close to 100,000. 2022, 127,855. And at the end of 2023, 140,473 employees worldwide. And by the way, this is after they had cut their workforce by around 2 to 10% a couple of times. So yes, Tesla does cut its workforce, but overall, it grows the overall employee count throughout the years. Now, right now, I wrote this. Tesla today is in between two phases, and so the recent reduction is a forced one. That's just my opinion, and I think many would agree. And then, of course, we should not forget about Elon's compensation package, the one that he was owed and still is owed because, well, he delivered on those huge milestones, which back then nobody thought he could deliver on. Yet, he doesn't get paid. Strange. Shareholder meeting, there is that vote. I'm going to vote yes. Some people will vote no. Probably those people are the ones that bought shares not so long ago. So yes, they are down. They're angry. They don't like Elon. They don't like his tweets, etc., etc. Fine. Free country. You vote whatever you want. To me, it's pretty simple. If the vote doesn't pass, I'm probably selling my stake, probably all of it, if not close to all of it. It's pretty simple. Without Elon, Tesla would have never reached $1 trillion. Tesla would have never been worth now close to $500 billion. Model Y would not have been the 2023 best-selling car worldwide. It's as simple as that. You would not have rockets that get launched and then come back autonomously. That's Elon Musk, yes, and his team. He's very, very good at recruiting world-class employees. And so if he's not part of Tesla anymore, a very, very big part of my thesis completely disappeared. So that's also something that's hanging above all of Tesla shareholders' head for the coming months. The last thing here, oh, and by the way, before the last thing, look at the performance of the other stocks from automakers in the last 5 years, by the way. Are they also tweeting stuff out? Are they also CEO of other companies, space companies, Neuralink, boring companies, social media companies, or do they just suck at their job? Asking for a friend. Anyways, looking at the Koch Investing portfolio for the week compared to the S&P 500, of course, it was a disaster of a week. Portfolio down 5.4%, while the S&P is down 3%. Overall, we're now down 8%, so definitely not a good week. Overall, the only two good positions I still have in green are one, Google Alphabet, close to 11% in the green, and PayPal up 6.2%. Yes, of course, I'm heavy in stocks, heavy in some volatile stuff. And yes, these do not perform if the market doesn't think that we're going to get some rate cuts anytime soon. And of course, with the sentiment shift right now, with the shift of a lot of investors, big investors, de-risking their portfolio, yes, these are the types of companies that definitely get hurt. Now, with earnings season now in full motion, a lot of things can happen. I still think that strong companies will continue to perform. Other companies that need to have lower interest rates will just have to wait. And I'm fully okay with that. This portfolio is not going to be a one-year portfolio. It's a portfolio for the future, and I can still change quite a lot from it. I might semi-break my first rule from the first day where I said I cannot add more cash to that portfolio. But if I find that the market has been punishing these companies a bit too much, then I'll be stupid not to add cash to that portfolio, to add an average down to those great companies. I'll wait. I'll be patient. Lots of companies that I own are reporting earnings in the coming weeks. That's going to be interesting. I'm, of course, going to follow and show you all of that on this channel. So if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.